Good evening. I'll now call the City of Cannon Falls City Council meeting for Tuesday, June the 4th, 2013 to order. Roll call.
Councilmember Duncan.
Here.
Holst.
Here.
Johnson. Here. Mattson.
Here.
McCusker.
Yes.
Schoblum.
Here.
And Mayor Robinson.
Here. All please stand for the Pledge of Allegiance. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Good evening, everyone. Welcome to the City Council meeting. First one in this almost fall-like June. Okay, at this time, the chair will take a motion to approve the agenda as submitted.
So moved.
A motion by Bill,
I'll second.
and we got a second. All those in favor?
Aye.
Opposed? Carries. Takes us to item 5 on the agenda, the public input. Citizens may speak to issues not on the agenda before speaking. Please give your name and address for the minutes, and please limit your comments to 3 minutes. Is there anyone wishing to address the council on the public input this evening? If not, we will move on to item 6, which is a presentation from the 2012 audit by Abdo, Ike, and Myers.
Thank you, Mayor and Council. Thanks for having us tonight. My name is Brad Faltasek, and I'm the partner in charge. Kevin Konopik, he works on the audit with me. He's been working on it for a few years now, so we're going to kind of present it together. So I'll present part of it, Kevin will present, and then I'll finish up the presentation. But you should have 2 reports in front of you. One is our audit report with the blue cover, and that includes your financial statements and opinion. The other one's the management letter. The management letter is our letter to management and council, just a high-level summary of what's in the financial statements themselves. We'll primarily go through just the management letter. If you have any specific questions, we can always run through the, or open up the financial statements, but primarily we'll just go through the management letter. And the first page of that management letter explains our responsibility in performing the audit, and that is to give you an opinion on your financial statements, to say whether they're materially fairly stated in all material aspects in accordance with generally accepted accounting principles. We are giving you an unqualified opinion or a clean opinion on your financials this year, as we have in the past. It's the opinion you're looking for when you have an audit performed. So the financial information in here is presented in accordance with, and materially stated in accordance with GAAP. To arrive at that opinion, we'll design our tests. We'll look at your internal controls for starters. If there's anything in those controls, like if there's a transaction where one person handles it from beginning to end, that's a material dollar amount, we'll concentrate and do more tests related to those types of transactions where either one person or a very few number of people are seeing a transaction. Those types of transactions are more susceptible to mistake or fraud or anything like that. So we concentrate on those types of things. Or anything we can confirm with a third party, like your bank balances. We'll confirm those with the banks, or you receive a lot of money in taxes and settlements. So we'll confirm what those revenues should be with respect to what the county sent you. So we'll confirm those dollars with the county. So those types of things we'll go through in arriving at our opinion. And again, we gave you an unqualified opinion. As part of doing that, we also are looking at your internal controls. It's not we're not hired to give an opinion on those internal controls, but if there's something that we see that lacks internal controls, we would bring that to your attention in our management letter. Page 2 is one of those instances, and this is a preparation of the financial statements. This is a finding that we present in probably 85 to 90% of our cities. We deal with a lot of cities of your size and some smaller, some a little bigger, but this really is, this is an internal control type finding where we're getting all the information from the finance director. The finance director is also the one that reviews the financial statements. We are presenting the financial statements, which isn't by itself an issue, but the person that's giving it to us and the person that's reviewing the financials is the same person. So there lacks some internal control there. We feel that, again, that everything in here is fairly stated and accurately reported, but there is some internal control related issue around that. And we started putting this in probably 5-6 years ago. The standards, our standards changed, and they, the standards boards wanted to really define the difference between, or what the role of the auditor was and what the role of management is. It is management's role to prepare the financial statements, but again, there's nothing wrong with us preparing them as long as there's some other controls in place. So just kind of surrounds that whole issue. Also, as part of the audit, the state auditor requires us to perform some compliance issues as part of our financial statement audit. So the state auditor gives us a checklist of different items that we need to go through. So we'll go through each of those, that 7 checklists that they give us, whether you're following statutes as they apply to cities. So we didn't find any issues related to those this year, so that's a good thing. Page 3 is some standard communication that we're required to give to you. You can read through that. Page 4 is where we start getting to the financial information. The first fund we talk about is your general fund. If you look on page 5, it's kind of a narrative there, but on page 5 we have a graphical presentation of somewhat the same information. The first chart on that shows your fund balance as compared to the following year's budgeted expenditures. The recommendation here usually is between 35 and 50% of reserves. You can see you're at 102%. That 35 to 50% comes from you receive the majority of your revenue through taxes and state aid. So those are received in June and July. So you want to have about 50%, if you're going the high end, of reserves in place to make it to that next tax settlement. And if you have over that, you have just more healthy fund balance. Part of your fund balance, so that 2.85 million there, $1 million of that is committed for future projects. So you really, if you brought that down to 1.8 million, you're about 65% of the following year's budget. So that paragraph at the bottom kind of shows we compare where you at compared to your peers. And we, over the summer, we'll compile a bunch of data from all the cities that have submitted audit reports to the state auditor. And we compare by population how you compare to other cities of your same population. So that, that group is 67 and 69% for 2010 and 2011. So you're right in that range. Again, anything over 50, I mean, you're healthy. So that 67 to 69 may be a little high, but that's what your peers are at. Page 6, this is a high-level summary of your the revenues and expenditures in your general fund. Original and final budgeted amounts. So you can see your revenues there. Actual amount came in at 2.823 million. You budgeted almost 2.7, so you received about $125,000 over what you had budgeted in the end. A lot of that had to do with taxes coming in higher than what you'd budgeted. Taxes came in almost $33,000 more than what was budgeted. That was the highest category of variance in the revenues. There were other variances, but which added up to the 125. Expenditures, those came in $55,000 under budget. So again, a positive variance in both revenues and expenditures. A majority of the expenditures came in general government, which accounted for about 46% of that, or 46,000 of that under budget amount. You can see you had transfers in of 45,000, sale of capital assets, and transfers out of 103,000. So overall, your net change in fund balance was an increase of $215,000 to the bottom line. Page 7, and if you have any questions, feel free to interrupt anytime, but page 7 is your revenues by source for your general fund for the last 3 years. Things I like to point out on here is your taxes. We have the second to last column is your taxes as as a percent of your total revenues in your general fund. I like to take a look at what that number is this year compared to 2 years ago for taxes. So in 2012, your taxes were 66% of your total revenues in your general fund. So you rely 66% of your revenue or support for your general fund is from taxes. In 2010, if we were to back out the sale of capital assets, because you had 250,000 of sales that year, you'd be at 60%. So you're relying a little more on taxes now than you were back in 2010. A lot of that has to do with the intergovernmental revenue, because with the change in the market value credits, you can see how that went from 609 down to 479, but was offset almost directly with your taxes. So that market value credit went right to your tax levies, or went right back to the property owner. So that's the majority of the change there. Okay. Page 8. These are your expenditures over the last 3 years by category or by function. We also add the peer group per capita. Again, we compile all this data over the summer and compare it, look at cities of the same population, the fourth-class cities, 25 to 10,000 population. So you can see in the general government, the first line there, per capita, Cannon Falls is spending about $167 per resident, where the peer group, other cities of your size, are spending $123 per resident. You can just go through the line there. Public safety, $195, Cannon Falls, and peer group, $204. So you're a little bit less on public safety. Public works, $137 to $108. Culture and rec, $94 to $47. Overall, though, for current expenditures at least, $622 to $497. So you're spending about $125 more than your peer group for expenditures. So about 25% higher in current expenditures. Capital, debt service, and transfers, those vary so much within how cities track different funds. We have it included there, but it's really, you can't really compare those types of things. There's different issues with every city. Okay. I'll have Kevin go through the remaining funds here. Just talking about the special revenue, your debt service, and enterprise funds.
All right, I'm going to talk about the special revenue funds first. The first one we have listed there is the library fund. You can see that increased roughly $39,000, and that's mostly because of payroll and capital expenditures are under budget. You can see that the cable public television fund had a slight increase, and that is, you still had that slight increase even though you transferred $30,000 out of that fund to the general fund. The fire department operations fund is still running at a deficit, but you can see that it was at almost a $33,000 deficit in 2011, and now you're up to roughly $4,600 deficit. So that fund is definitely moving in the right direction. I'll go to page 10 and talk about the debt service funds. Here on the bottom, we summarize the total cash that are in each debt service funds with the bonds outstandings and those maturity dates. The one thing to point out here is this monitor those future cash needs for the debt payments that are coming up to make sure that the tax and assessments coming in are sufficient to cover those bond payments. On the next page, page 11, we summarize all your capital project funds. I'll first point out the 2012 library construction fund. That fund balance is at a deficit of roughly $145,000. With all capital project funds that are running at a deficit, it's important to consider how you're going to fund those deficits going forward to get those to be a positive fund balance. And with that, to make sure once capital projects are done, to be closing those funds out. You can see down further, the police capital fund had roughly a decrease of $60,000, but this was mostly due to capital purchases of 2 new police vehicles. So that will be made up next year with future revenues and transfers in if needed. The next line below is the fire capital fund. That decreased $330,000, but you did purchase a new fire truck, so that was the main cause for the decrease in that fund. Moving on to the next page, we start with the water utility fund. I'd like to focus down on the cash and temporary investments line. You can see from 2010 to 2011, there's an increase of roughly 500,000. That's mostly due to some bonds being issued. And then the decrease was about 350,000 from 2011 to 2012. But that was mostly due to about $350,000 of capital purchases in the fund. It's important to monitor your cash balance related to your operating expenses for the year. We recommend that there's enough cash balance to cover 100% of the operating expenditures. So you can see that your cash investments at 1.1 million covers your operating expenditures of roughly 640,000. But also to keep in mind that you're going to have $426,000 roughly of debt service payments out of that fund until 2021. So it's important to monitor those rates in the fund to make sure that they're covering your operating expenses, capital needs, and any debt service payments.
Say that non-operating expenses, what is that?
That's mostly debt interest, bond interest that you're paying on your debt. That's
Okay.
what that mostly consists of.
I think 90,000 is bond interest as expense, and then there's like 5,000 of interest revenue that nets to that $84,000 decrease, or
Okay. Now, Aaron, I was looking at this, and did we raise that like 6-7% last year? We took part of the budget. Wasn't that last year we added 6-7% to this fund? And I was just kind of curious because we're still in a negative on the thing.
We raised it the last few years. I mean, what we did last year was effective this year, so it's not showing up in this audit. This audit is what we did back at the end of 2011 when we set the rates for 2012. And I can't remember what the increase was for last year, but probably around 5% if that's what we stayed with what we were doing. But we take a look at it every year and we do the analysis on it. So we're still fine in the funds. We take a look at them every year. We figure out what the interest rate or what the rate increase should be, and then make the adjustments. So, we're always been playing a little bit of catch up in these funds, and we've known that. If we really want to balance things out, we were looking at really high increases, and instead we've looked at doing incremental increases over a number of years. So we're still okay. We'll take a good look at them again, towards the end of this year when we finalize rates for next year, and we'll obviously use this, the budgeted numbers and then also our actual numbers from the year to date where we're at. But I mean, we're moving the right direction in these funds.
I
That's for
think
sure.
we had to raise it like 6% or something, and I think we took part of our extra money we had, we put like 40,000 to it, and we only went 2 or 3%. I guess the amazing thing is for me, it don't seem like it improves much each year.
It is getting better.
Okay.
We're doing okay with it, and it is getting better. But we knew from the beginning, ever since 2008 when we adjusted, the rates and kind of set the plan for increases, that we had a real long schedule of kind of getting things balanced out. So we knew it wouldn't be overnight. I think we've talked about before, if we were going to try to fix things quickly, those increases would be more than, I think property owners would be interested in dealing with. So
They aren't interested where we're at now.
so we spread them out as much as we can. So we're going the right direction still. That's the good thing. We're not going to fix it overnight, but we're going the right direction.
Yeah, thank you.
All right, moving on to the next page, page 13. This summarizes your disposal fund for the past 3 years. You can see that cash increased a little bit from 2010 to 2011, and this was again due to the issuance of some bonds, and then again decreased from 11 to 2012, mostly due to some capital needs. There's going to be about 900,000 in debt service payments through 2021 in this fund, so it is important to monitor that cash balance to cover the operating expenses and your debt service payments. And again, that non-operating expense of roughly 233,000 is mostly related to the debt interest.
And with this one, it's important, I mean, you're generating 150,000 of operating income, but like Kevin said, you have $900,000 of debt service expenditures you have to cover too, so.
Right.
Moving on to the ambulance fund, you can see that the cash decreased significantly from 2010 to 11, but this was because you purchased a new ambulance. And then there was an increase from 2011 to 2012 again, and that was mostly due to collecting on some outstanding receivables in that fund. You can see that the cash balance is significantly less than what your operating expenses are, but it is moving in the right direction to increase that cash balance.
You know, that thing, Aaron, we've added an employee or two since this year now, right?
Right. Yeah, when you look at the ambulance, I mean, we knew going in as we were kind of ramping up for the new Mayo Hospital to come on board that we would have a year or so where we would be hopefully breaking even, but probably losing some money in the fund until everything got up and running. But we know that with the hospital opening up and our amount of transfers coming, that we'll see that revenue kicking up. So we're not overly concerned. We knew that we would have to do it. We wanted to get it on board early so we can get the operations going. It's just so hard to say. It's all based on runs. You've got so many runs one year, so many less runs the next year. Those are all hard to budget with. So we do the best we can, but we do know that we're going to have a large number of those transfers coming now that are one of the few things that we do that actually pay us a fair amount when we get reimbursed. So we knew that we'd have a year or two of being close, maybe losing a little bit, but that we would be in place then when we needed it to take advantage of the new hospital. So we're right where we thought we'd be. I think we had less runs than we maybe anticipated, but again, that's a tough one to know. It seems to go up and down, but generally when we look at the history of it, it always balances out. If you have a low year one year for whatever reason, it goes higher the next, and we end up with a little bit increase in the fund balance that next year with the number of runs and things. So generally speaking, it does balance itself out over time. But I think we're on track with the ambulance. We knew what we're doing. We needed the people there, and that's also one of those funds where while you'd like it to be self-sufficient, if it's not, it's something you look at, and the council would have to look at and decide, what do you want to do? I mean, you want an ambulance service, you want that control, you want the good coverage that we have. It may be something that we've known before that at some point we may actually have to subsidize it to assist, with the service. There was a number of years where it was going the other way, where the ambulance service was making a lot of money and the city was taking money from the ambulance service to the general fund in chunks of 100,000, 50,000, 25,000. In those years, the city was taking that back for general fund operations. And now in these years, when we've ramped it up to get ready for something else, we've discussed this, that we have to take a look that we may have to go the other way at some point and assist with their operations for a year or two. I don't think we need to yet. We'll look at the 2014 budget as we go through that process and see if we think we need to do any of those transfers over, from the general fund. It's a possibility. But I think overall the ambulance is, where we thought it would be. We may have to help them out for a year or two until, the hospital is fully up and operational, but it should get back to that point where they're close to break even. And, with the ambulance, that's all we're looking for. Anything close is good.
Well, the thing is with the ambulance and like the license bureau stuff, you can't help but look at this and kind of see it's going the other way, and you can't help but be a little worried about that. You also realize that the ambulance is a service that we're providing, and even if it just broke even, I'd be fine with that. But you get a little bit concerned when it's kind of leaning the other way.
Yeah, and I agree. And like I said, 65,000 isn't bad, especially considering that we've added a third full-time person. The amount of the things that we have there now. So I think we'll easily make that up once the hospital's up and running, and if we get just the projected transfers that we were thinking, that we'll easily make up that amount. So we should be covered with that. So we'll see. I mean, we don't never know for sure until it's actually happening, but from what the projections are, we should be fine with that. And we anticipated that we would have a few years with the ambulance fund as we added, Mike as the second, basically regular full-time person, and now with Ivan as the third, that we'd have some years where we'd be under, but we expect to be able to make those up.
Right.
Okay, the next page summarizes your storm water fund. You can see that the cash and investments increased about a little under 250,000 from 2010 to 2011, for some bonds that were issued, and then it decreased roughly, let's see here, about 200,000 or so due to some capital projects for the West Side project. There are going to be some debt service payments coming up on that debt that was issued in 2011. Starting in 2013, that amount's going to be roughly around 20,000. Next page summarizes the deputy register fund. Nothing much to point out here, just that operating income, you had some for 2012, so nothing much more to say about that fund. Recycling program's been at an operating income for the past 3 years. You can see that there's a cash deficit in 2010 of roughly 7,000. And you can see now that that's increased to roughly 27,000 in 2012. So you can see that your revenues are far exceeding your operating expenses in that fund. With that, I'll turn it back over to Brad to go over some of the ratios that we compile.
Okay, page 18 is the ratios, and again, this is a result of the project we go through over the summer, just requesting all this data from the state auditor, and we sort it and put it all in, or sort it by population. So these are, again, the peer group, the ones in red there, are your peer group numbers, so it's other cities between 25 and 10,000 population. So first one there, debt to assets. These are your total assets in the city compared to your total liabilities over your total assets. So this shows if you had $100,000 of assets, 50,000 of that would be, you'd have debt outstanding against it. So that'd be a 50% ratio. So you're at 44%, pretty consistent from 2009 to 2012. Not very many huge spikes there. Your peer group has been around that 34 to 37 range. So you're a little above peer group in that category. Again, the peer group is here just to look at what other cities of similar size are, but what we really like to concentrate on is what the trend is for your city. Are you going up or are you going down? Is your results improving or are they going the other way? This next one there, your debt service coverage ratio. This is just taking a look at your enterprise funds, your water, sewer, storm funds, and are you generating enough operating cash to cover your debt service payments? So back in 2009, you were at 46%, which is well below. You'd like to see this at or above 100%. So from 2009 to 2012, you went from 46% all the way up to 86%, where the peer group's at just over 100%, at 106%. So definitely going in the right direction here. I think you're doing the right things with adjusting your rates, analyzing your debt service payments, going out and making sure your rates are meeting those needs. So like Aaron said, this is a gradual process. You kind of knew coming in that it was going to take a while, but making the right decisions going forward. Debt per capita. So how much bonded debt you have divided by the population. You're at 52, almost 5,300 compared to your peer groups, about half of that at 2,800. So definitely have more bonded debt than your peers. You have had some significant projects in the last 6-7 years, so and some development that you put some infrastructure in, so that accounts for the majority of that. Taxes per capita. This correlates with your debt per capita. It is higher than the peer group. Not the percentage increase, the percentage higher that your taxes are is much less than the percentage higher your debt is. So you are covering a lot of that debt with assessments and other revenue sources, or I guess the majority would be assessments. Current expenditures per capita, 872 compared to 640, so have more operating expenditures as we saw within the general fund. The majority of those categories in the general fund were higher than your peer group. Capital expenditures, this can fluctuate from year to year depending on the number of projects you're doing. But you can see on a consistent basis you're doing more projects than your peers. So again, that correlates with the debt per capita number, the taxes per capita number. You're staying ahead of a lot of the projects where maybe some of the other cities are delaying some of these projects. The last two categories, capital assets left to depreciate, the percentage. This number shows basically how old your infrastructure, your equipment and infrastructure is compared to the accounting life. So if you have a road that you have on the books that you think is going to last, let's say 20 years, if the accounting life, if it was 10 years into its life, this percentage would be at 50%. So that's kind of where the percents come from. So overall, though, you're at 71% for your governmental type assets. These would be streets, bridges, governmental buildings. And your enterprise ones, that last category, that's at 71% as well. These would be your water, sewer, infrastructure type assets in your enterprise fund. So both of those are at 71%. Both you can see your percentage is higher than your peers, so you have newer assets than your peer groups in these categories. Any specific questions on those? Again, you want to take a look at the trends, and there should be if you're going up or down, you should be able to explain those through either you're reducing your debts or increasing your debt or numbers. Is a majority of that. Page 19 and 20, these are some, or page 19 just explains those ratios a little more. 20 and 21, 22 outlines some new standards that are be coming out that we'll be working with staff on implementing. There will be a few things that affect the financial statements, some big changes with how we report pension numbers. I think 2 years down the road, 3 years down the road, and how those numbers are going to be showing up in your financials. But that's 2 years, 3 years out, so we'll be working with staff to try to get those numbers on the books going forward. So still kind of working that, how those new standards are going to affect the your para numbers. So. But with that, any questions at all on anything else in the report?
I got one thing for Aaron. Where does the EDA enter into all this? Is that a separate fund, or is that all packaged in this?
No, I mean, it's still contained in our audit. So we don't, it's not in the management letter itself, but in the full audit, it is in there. And I don't know, Brad, if you know what page it is in there, but.
If you look on page 20, well, maybe we got some better schedules in the back.
The audit of the EDA is in the full audit for the city.
Page 110 and 111.
So
110?
you can take a look at it there and see where it's at.
Yep.
Okay. So does that figure into the whole thing, or is that completely listed separate there? I guess I didn't see that or read that.
It's sort of a separate, it's still part of the city, but it's just separately identified in the audit. Is that
Yeah.
kind of a good way to
It's
say it?
referred to
Roughly, what's our fund balance in that today?
There's actually two funds that make up the EDA. There's an economic development fund that has a fund balance of just over $50,000, and then there's the industrial revolving loan fund that has $400,000 fund balance.
Okay.
So in total, about $450.
Okay. And then also, Aaron, we always talked about 57%. Is this at 56 now, or?
No, actually, I
or
think that's, I
102,
don't think that's quite right. I think on that management letter, that first page.
Oh, yeah, the general fund?
Yeah, I think it's actually higher than 56% when you take that $1 million out. I think it's 60-something%.
Yeah, I think
60-something
60,
percent.
65, somewhere in there.
Yeah, I think we're actually at about 65% as of this audit, but this doesn't take into account, say, the land purchase from MinDOT of 270,000 that just happened this year. That tower rent of 60,000 that we got.
Well,
So
the Videocom and all that, that's not in here.
that's not in here, no.
Right.
So when we talk about this at our work session, well, if it goes through after our next council meeting, we'll try to give our best year-to-date where our general fund balance is, because we'll include the audited numbers, and then also any changes that have happened since the end of last year, which would include those numbers. So when you put those numbers in there, I mean, we gotta be 70s somewhere probably.
Well, to me, it must be around 340,000 that all that stuff comes to,
Well, I mean, that's just what we're adding this year to it.
right?
Yeah.
But actually, we're still somewhere around 57%, right?
No, we'll
No,
be
we're
in the
higher than that.
70s
Oh,
probably.
no, when you add that, I know, but right as,
Even now, I think we're about 60
We're
something probably.
67.
Are you talking about the general fund or the EDA?
General fund,
general fund.
Okay.
the general fund reserve.
Yeah, you're higher than that. You're at the end of the year, you're probably 65.
Yeah,
So we're probably closer to 65% or so, somewhere in there, not 56. We're at
Right.
60 something. So that's in this audit, not counting anything that happened this year, the MinDOT or anything else.
yeah. No, I don't have a problem with that. I was just wondering why we were at 56 instead of 57, but we're actually at 62.
We're somewhere in there, yeah.
All right, thank you.
Yeah.
Any other questions? Well, thank you again for another audit, another year. Things are, as you can see, I mean, when we start looking at peer groups and stuff, we've been doing a lot in the city, and the numbers there on the last page where we look at the life left is a lot higher than a lot of other cities because we have been doing a lot, and so, and it'll show later on down the road as other cities have to start doing this, we'll be up there, so, thanks a lot.
All right, thank you.
Thank you.
Thanks, Linnell and Aaron,
Thank you.
for all their help, so.
Yeah, I gotta tell you guys, I like that one phrase in there where it says, "We obtained reasonable but not absolute assurance." I got kind of kick out of that phrase, I just thought I'd say it. Not absolute.
If we're
it
gonna do
said.
absolute, we'd still be here looking through stuff.
Oh, okay. Thank you.
Thanks.
Thank you.
Okay, that'll bring us to item 7.
Can we get a motion to accept the audit?
Okay.
So moved.
And I'll second that.
Have a motion by Merle, second by Bill, to approve the audit. All those in favor?
Aye.
Opposed? Carries. We just said presentation, didn't say anything about. All right, moves on to item 7, the consent agenda. In this area of the agenda, may be adopted or they may be removed and placed on the business area of the agenda for discussion purposes before approving. For those folks at home, I'll read the consent agenda. Item 7A is the just and correct claims for accounting period ending May 31st, 2013. Item B is the meeting minutes for the May 21st, 2013 City Council meeting. Item C is the meeting minutes for the May 21st, 2013 City Council work session. Item D is the approve Schofield Drug and Gift to sell tobacco products. Item E is authorization to dispose of vehicles. Item F, general fund reserve work session. And item G, maintenance worker 2 posting. Are there any items anybody wishes to bring down?
I don't have anything to bring down. I just have a question on the E, authorization to dispose of vehicles.
Okay.
Does the Public Works do this too?
I'm sorry?
Does the Public Works ask for disposal of vehicles too?
Well, any asset of the city, we have to, before we can dispose of it, technically have to have council approval for.
Okay.
So if,
All I've ever seen on here is yours.
well, I think what you see when Public Works does it may be a combination of, we're replacing this piece of equipment. So you're authorizing both the purchase of it and whatever trade or disposal would be.
Okay.
Yeah, usually we trade it in or we just keep them forever, so. We don't often get rid of a lot of them. They're still out there somewhere being used somehow.
All right.
Yeah, and these are actually forfeited vehicles that, rather than selling them, they really don't have any value beyond salvage. So we're going to get some use out of it with the fire department this time.
I got a thing on F there, Robbie, maybe I could just ask a question, or would you rather I pull it down?
Let's, you have to-
I think that meeting was, what, on the 18th or something, or,
Yeah, that's what we're thinking, after the next council meeting.
okay. I'll be gone, supposed to go on vacation that week.
We can push it to the next one, it's fine with me. Doesn't hurt anything to push it off one
Yeah,
more
so
week.
I guess I'm open outside of, if I could get, what your thinking is before the
We-
15th, and I could drop you a letter off of my thoughts on it anyway, so you wouldn't miss me.
I'd feel bad if you missed the conversation, though. I would be more than happy to push it off to the second. That's okay. I mean, it gives us plenty of time to deal with before, we finalize budgets or anything, so it's not a big deal to push it off one more council meeting.
everybody gonna be here for July
I can't
2nd?
make that one.
That's fine.
Huh?
I won't be.
Oh, no.
What about then the 16th? Honestly, I mean, we're not running into trouble of timing here at all. I mean, we don't finalize the preliminary budget until September, and so the only change that would really affect that this has on the preliminary budget is if we decide to pull some of the capital projects we're gonna finance and pay for them. So that second meeting in July is fine too. It actually probably gives staff more time to do things, so.
We can
We're
do
okay
that.
with
I
that.
mean, we can just approve the consent agenda with the change to the general fund reserve work session to the 16th of July then.
Yep, that's all we gotta do.
Thank
No
you.
problem, that's good.
Okay. So if there's nobody that wants to bring anything down, then we will take a motion to approve the consent agenda with the change to item F, general fund reserve work session will be on July the 16th.
So moved.
No, second.
Motion by Merle, second by Bill. All those in favor?
Aye.
Opposed? Carries. Moves us on to item 8, council business, resolution 2021, approving county project within city limits.
Okay, we've known about this project for a long time. It's really nothing, nothing new. It's just the extension of 24 off the new interchange that will serve, well, basically the new Mayo Hospital. I do have Goodhue County here to answer any questions. We included in the packet it's obviously it's just a very simple resolution, but the map of what the project's going to be. And I don't know if Ken or you guys want to come up and just, if anybody has a question, they can, feel free to ask of them. But, it's the same project we've been discussing for a while. It's just that because a portion of it does fall into the city has to give consent on it.
And that's-
Aaron, I got a question for you. I realize you can't change it now, it's been going on so long, but I thought about, when they did this down at Red Wing, on the east end of Red Wing down there, they put walking trails and bike trails in with them crossover roads and stuff they did down there. Are we thinking about that, or is that, I mean, I thought if you had a trail like from at least the school there, when that gets done someday, to like Cedar Hills and stuff, or even to the clinic, it would be kind of a nice asset to this. And what they did down there is just ran it in the ditch or blacktopped or something.
I'll let one of these guys answer the question about if they include trail right away, but I do know like for the interchange project and those roads, we do have trail right away included in that. So we can do trail in the future. The trail is actually not going to happen right now just because for budget reasons, but all the right of way will be acquired and ready for it when we want to put the trails in. And that's for the stuff that's strictly for the interchange, itself and the backage roads and all those sort of things. But I'm not sure about 24, so I'll let Ken answer that one.
Well, I'm sure it would, things are set kind of in concrete now, but it would be nice if we kind of plan for that, if we get a grant someday. It would be nice to tie that into the school and our trail, take it all out that way.
Hi. Hello, I'm Ken Bjornstead with Goodhue County Public Works, and actually, we have planned a trail on one side of the road all the way through there, so.
Oh, wow.
It is part of it.
Wow.
And long-term, Ken, that'll go all the way over to Hardwood Way and
Right,
when that
yeah,
comes, okay.
yeah. We, with, knowing the school was over on that end, we felt that at some point, there's going to be development there and that it would be a logical trail connection. So it is part of the plan.
Yeah, it's really a nice trail they got on the east end of Red Wing out there, going towards Frontenac or that way down there through some of them country roads or whatever they are from
Yeah.
the college down there.
Yeah, I think you're thinking of County 21 probably, runs from 58 down to Highway
I've been
61.
there on the motorcycle, but I don't know which number they were.
Yeah. But, yeah, that one worked out particularly well because the old road wound around those hills and we were able to kind of change some of the old road into trail and have the new road. So, this one, the trail will be pretty much parallel to the road and off to the side, so.
You think, Aaron, this road will be used much till we get it through? I mean, most of them are gonna cut down to,
It's hard to say, you know, really, it's just gonna be hard to say how much use it's gonna get, you know, it's kind of a
Right.
toss of them.
We've wondered the same thing. I mean, obviously, when we were planning it, we're planning it for the complete thing, and then, of course, funding being what it is, you build what you can, when you can. Until Mayo really decided to go ahead with this, this was in our future plans, but it wasn't going to be built nearly this soon, so, but Mayo's, moving ahead. Once MnDOT pulled the trigger on the interchange, it kind of pushed us ahead, and it's been a struggle. We're behind where we'd like to be on the project, but we still plan on having it open by the time Mayo opens, so.
I know 5, 6 years ago on the planning commission, we discussed down there, it would have really been nice if this actually would have went all the way to school and that got turned into 19, so that all the 19 traffic went right out the overpass, and we tie it back in on top of the hill to downtown or something. That would have been the ideal situation with this, if we could have rerouted the Highway 19, because we got a problem in town with Highway 20, which we'd like to go out to 86, but now they're not doing that overpass out there. And the Highway 19 out here would have been nice to go around Cannon, because we're ended up with semi-turning problems downtown. So we got some kind of problems there we got to deal with in the future, but I think once it's all the way through, it's going to be a great asset to the city.
Yeah, we agree.
Any other questions? If not, Chair, I'll take a motion to approve Resolution 2021 for the municipal consent for Goodhue County to build the road.
So moved.
And I'll second.
Motion by Merle, second by Bill. All those in favor?
Aye.
Opposed? Carries.
Thank you.
Thanks.
Thank you.
And with that, we will move on to reports. Mr. Maroney?
None for me, thank you.
Brenda?
I just have one quick thing tonight. I need to recognize 4 members of my staff. They just completed and they've gotten their results back officially from the National Registry, and they're getting them back from the state now, so it's official. I had 4 members of my staff who were EMT basics, have completed the years-long and lasting program to get their paramedic certification. So we now have 4 more paramedics to work on our service, and that would be Justin Dahl, Jacob Litvin, Joseph T. Meyer, and Mark Trainer. And I want to extend my congratulations to those 4 for that long year's work and the effort they put into that, and to congratulate them and thank them for their work and for continuing to work with us in that capacity. Thank you.
Thanks, and, yep. Let them know that we concur with your congratulations, and a lot of hard work goes into that, so, thanks. Chief?
Just want to remind everybody that on the 13th will be the Nature Valley Bike Grand Prix. We're still working to finalize all the details. Our Will Hone plans have had to been tossed aside this year because we moved it to the west side. So we're still finalizing all the stuff. I'm going to be at a meeting tomorrow morning that'll will cement everything, and will be some disruption for people on the west side that evening, but we should be able to minimize most of it to just during the event circuit in town. There will be some impact on the Mill Street area because of the setup, and the children's bike race will run down 6 to at least Hoffman, I believe, maybe a little further. But we will try to get residents where they need to go, unless their bikes are actually within the circuit. From there, we will zip forward and have the 4th of July and the fair, only 2 weeks after that. So for us, it'll be a busy few weeks. That's all I have.
Okay, just a few project updates. East Side project has started. One of the good things about these projects is we learn a lot about our system, that especially when it's been in the ground for a long time. So we want to apologize to some residents who aren't part of the project but had their water shut off and weren't notified. There you go. we shut off a few lines for a few blocks that we were going to put the temporary services in, and we didn't realize that those shutoffs covered a whole lot more area than that was on our maps. So we learned that now. So we did try to get out to those property owners, let them know what was going on, and we did apologize for that. And the nice thing is now we know in the future what these things do. But that is something that happens with these projects, especially when we got those old lines. Is you assume that this shutoff handles this block and this area, and then the next thing you know, you're getting phone calls from a little farther away saying, "Where's our water?" And so we're taking note of that now, and we're actually adding a few more shutoffs to make sure that we can do things a little more efficiently and not take down whole blocks and areas at a time.
I did call after this afternoon because I'm going, what?
Yeah. So we're learning as we go with some of this stuff. So we apologize if it happens. Call, let us know right away, and we'll address it with you. But otherwise, the project's moving forward. As far as I know, other than that, fairly well. We had the pre-con meeting for the interchange project today. Honestly, I never thought we'd actually get that point, so it was kind of nice to sit in the meeting and actually see all these contractors and utility companies in there, and it makes the project seem even more real. That was good to see. The project is moving forward on schedule. They will be starting sometime on or after July 5th. They'll be going first with bridge work, so you'll see like bridge stanchions and things going in along the highway, in the median between the highway, those sort of things. You'll see a lot of the bridge work happening this year. Once a lot of that's done, they're going to start focusing on the backage and supporting roads and things like that as it moves forward. So you'll start to see a lot of activity in that area in July. There's going to be a lot of traffic down there, a lot of construction going on. So we'll for the city's part, we've got obviously some of our utility work that'll be done as part of the project, and we'll be monitoring that part. We'll be taking down that south entrance sign sometime soon and storing it. We're not sure where it's going to go yet. We didn't want to lock in a spot with the contractor until they actually got on site and started doing work, because things always seem to change once they actually get into construction. So once they get into construction and we see a little better where the roads will officially be, we'll have to pick a new site for that sign and get it replaced, but it will be down for a while, as part of the project. Otherwise, it's all moving. Everything's going well. There were no issues that were raised at the pre-con today. Henches had a large contingent there, so this is a big project for them. They had, I think, most of their senior staff were at the meeting today, and like I said, all the other utilities and subs are there too. So it's moving, and that's good. And then the only other one would be that we did get the final signed assessment agreement for the home south of the school. So we have 100% of compliance with all the agreements. We should have a change order, I hope, ready for approval at the next meeting as part of the East Side project to get that all wrapped up and done with. So I was very happy. I had to make only 3 phone calls, I think, and all 3 said, "Oh, we've been out of town."
Wow.
So that was great. Yeah, I was amazed. I thought it would have been a little more difficult, and it was not at all. And like I said, the 3 I had to contact would basically just been out of town, hadn't got through that stack of the mail yet, and they brought it in the next day. So it was very good. I think clearly the council made a decision that not only helped us get a situation taken care of, but helped these homeowners deal with something they've been kind of having hang over their head for a number of years. So it worked out really well.
Wow,
I think
good.
other than that, that's all I have.
Did we get the final approval for the Olmsted Medical Road?
We're working on that. One way or the other, we're gonna start.
Okay. Merle?
Nothing.
Nothing. I have
No.
nothing.
Leroy?
No?
Leroy? Jay?
No. LGA, we're gonna be up 140-some thousand?
Much, yeah, so we got ourselves a $180,000 swing, which is very good news. We were set to lose $40,000 under the current plan, and now with the revised formula, we'll gain $145,000 in LGA. So that should definitely help a lot next year. We're hoping that, with the way we've been budgeting things, that we can actually look at I hate to talk too much, but a decrease in levy for sure, being able to use those funds. So that's what our goal is going to be when we present to the council is taking advantage of those funds, not by needing to raise spending anywhere. I think we've found over the last 3-4 years that becoming more efficient and maybe moving allocating some of the money a little differently, we can still provide the same level of service that the council and the citizens expect, just do it maybe a little more efficiently, a little differently. So we'll work with the department heads on a budget that's going to try to take advantage of what the other council goal has been, and that's actually to decrease that levy as much as possible. So that's what we're hoping for, to be able to use that money.
And I don't have anything, so with that, Chair will take a motion to adjourn.
So moved.